currently, Adam?
Oh, chilling with the coffee. Oh, he's right there, so he can hear and stuff.
Yeah.
Who else hopping on? Michael?
Yeah, training.
How was your weekend so far, man? Slept 11 hours. Do it, man. I was able to get some sleep in, bro, for sure. It definitely needed. What's today? Sunday? Yeah, bro. I knocked out like when my children went to bed, like 8. Turned in at 8 o'clock, bro.
It's the man himself. What's going on, Adam?
Hey. Yeah, bro. I'm excited, bro. Fresh month, fresh. You know what I'm saying? Fresh. You know, I don't know. Just I needed weekend, bro. We got Ramon.
Oh, yeah.
Yeah, bro. How was your last day at work, bro?
Perfect.
Hey, you know what? You know what I'm saying, man. This Forex thing, it can create freedom, bro.
Let's see. Hope so.
And in your case, bro, you exiting the job a little bit early, huh, to do some other stuff. So I love it, bro, because it's like usually you would want to wait until. Well, most people wait until they have massive success. They overkill it, and then they leave the job. But you're like, hey, this is gonna work. So I'm gonna. This is gonna.
Oh, I got exit chances, so it's all right.
Okay, yeah, that's a little bit better. You're not completely, yeah. You got it.
Just don't want to work the next half year, so.
Yeah.
Are you still like live, like talk to her or no?
See. All right, I think I'm gonna wait a few more seconds. I want to see where Michael's at. Hopefully he's maybe his family. Oh, he said he was doing breakfast. Let me see. Michael.
Yo, what's good?
Yo, there you are. I was just messaging.
Oh no, you're good, bro. You're good. I'm with the family, but I definitely want to hop on, and then if I get a sense to put my 2 cents in, I got you, bro.
How's the fam, bro? I see you posting pics.
Fam's good, man. Fam's good. You already know it's got breakfast going.
Yeah.
So, like I said, do your thing, young Trip. I got you, bro.
You got me, bro. Okay. Yeah, the fam is definitely cool, bro. Cause my son, he started potty training, bro, and that's been crazy. Yeah, he started potty training him like this past week, and that's been interesting. He's doing a good job though. 2 years old, I think he's had a little bit of tension trying to go number 2, but he's doing good so far. It's awesome. The fact that
There you go. There you go.
yeah, the fact that I'm able to be home and watch him grow and stuff like that and do different things is definitely a blessing, man. Anyways, I think we can hit the charts, baby. Let's see what we got. Let me know if you can see my screen. Yes, you can see the screen. Oops. That is going to be annoying. All right, can you guys see the share screen?
Yeah.
Okay. All right. We got. I need to delete a lot of shit off my computer. All right, we got Euro USD pulled up, but what do you guys want to look at? I kind of want to go to the Canadian because I was trading this.
We could look at the Canadian.
Yeah. Okay. And I want to look at the Canadian because, bro, I've been trading the Canadian like this past month, and it's been raw. It's been pretty clean because on the daily, I had some analysis going at the beginning. I never posted the recording, but when the market was here at the beginning of the month, I saw some divergence setting up on the daily with the CCI indicator, and I was anticipating this level of resistance up here to be pretty strong, and I've been selling the CAD pretty much all month. Well, not all month. I sold it for like a good few days. I didn't think it would keep going, but then once it broke below here, I was like, all right, cool. It's making a full retracement, a full swing. And so, yeah, UCAD was a sell this whole month. And so the past like week and a half, I've been looking for it to turn. And it took about that whole week and a half to turn. So 1, 2, 3, 4, 5, 6, 7, 8, 9. I guess 9 trading days of me watching it, anticipating it to reverse. And I thought this bullish doji was gonna do it, but that was definitely kind of a fake because they made a slow ass U-turn and then kicked it off with the UCAD news a few days ago and just freaking destroyed everyone's stops. Like, but I caught that because I was like, nah, I'm not gonna swing it because it's gonna take too long if it's moving this slow. But I was like, oh, I saw the Canadian news last week, and I was like, no, what they've been doing is they've been trying to play it out like this and then have all of the correction come in on that one day or those 2 days, which it did. Like in 2 days, you know what I'm saying? This was gonna be my, you know what I'm saying, my bi-weekly swing, but that shit happened. That TP'd out in 2 days. And I had to re-enter. But so that was pretty nice. And that's one thing about news is I always tell people, like when you are looking at the market, especially from a technical standpoint, you don't have to necessarily worry too much about the news unless you're scalping, because the news and the fundamentals are always going to obey the technicals. And because the market is based it isn't just based off of news. It's not based off of technicals. It's based off of, you know what I'm saying, the Federal Reserve banking system, and they already know how much they want to value each country's currency at any given moment. So, like, you know what I'm saying, they know they have it planned out what the US dollar is going to be worth towards Canadian 6 months out. They just now have to, you know, algorithmically, you know, get the price and correct it, you know what I'm saying, every freaking day, every freaking week to get, you know what I'm saying? So, like, this shit is predictable. It's a lot more predictable than another market, any other market. You know, someone had mentioned, you know, if we get taking all the same positions, that's cheating. No, because the market is now $6.6 trillion a day market. Retail traders are never going to have enough to move the market even one pip. And so it's a lot different than the market, the stock market, even, because, you know what I'm saying, you got 500 mil, you can do something and manipulate and do a pump and stuff like that. But that doesn't happen with the Forex, and which I love. It's not easily manipulated. The only manipulation that's going on is from the Federal Reserve banks and stuff like that. And so and that's a lot of the reason why I stay with technical, because it's not easier, but it's a lot more. I guess I'm not dependent upon specific, you know what I'm saying, like world events. Almost like, so if you have a tsunami in Japanese in Japan or some catastrophe, you know what I'm saying, the Japanese yen is going to be affected greatly. But when you go back to technicals, the charts, the price was already going to correct there anyways. The news had just accelerated that correction and made it happen faster, if that makes sense. So I kind of want you guys to have some understanding of like where I come from as a trader. I definitely look at the markets from a technical standpoint. I do enjoy swing trading, because my patience is tested. I'm definitely a scalper and day trader, but I do know how to swing, and sometimes I still need to have patience on some of my trades and stuff like that. So I do still like to swing trade in between some of my moves and stuff. But as far as the intraday scalping and trading, my bias comes from the bigger time frames. So usually at the beginning of the week, I'll look at, you know, what my bias is going to be. Is this in a downtrend or an uptrend? And so forth like that. And so usually when you're able to determine where the higher probability direction or the market direction is, you're able to have now a more like honed in trading plan. Talking about, like, say for instance on UCAD, I'm looking for a continuation of this downtrend. So this made a retracement. I'm looking forward to be bearish. Let's say I'm bearish. The whole week, every time I get a wedge alert, I'm only looking for an ascending wedge alert so I can short the market. Or if I'm doing another strategy, I'm only looking to sell US Canadian, since my analysis on the higher time frame is the larger direction is, you know, bearish for me. So usually that helps, because when you get into the smaller time frame trading, a lot of people get caught up trading against the trend. They'll get an alert or they'll get a breakout, and the breakout is in essence a false breakout, or it's a retracement breakout. So it's only going to go so far, and it's limited. And then if people aren't taking their profits early, or in a reasonable amount of time, they're getting stopped out because they're trading against the trend. You know what I'm saying? So that's something to be aware of when you're looking at the smaller time frames. Because if I go to the how do you say? Yeah, the 15-minute on the Canadian. I do want to look at a few examples And one thing that I did explain also in the last webinar is the main things to be approaching the market with is having a daily or weekly directional bias on the pairs that you're going to be trading, so that when you're on the smaller time frame, you're able to pre-qualify what trades you're going to take, because you don't need to take every trade, every alert, everything. No, you don't want to do that, because now you get into over trading, and now you could have your ratio become less. So it is good to trade less, but trade more precisely, and there are different ways to pre-qualify or confirm your trading, how you're going to be trading before you get down into the actual strategy. So one of them is looking at the higher time frame and looking at what direction you're going to be trading each pair, each week. And usually it's not a hard thing. You're just looking at, hey, the market has been going up more days than it's been going down. You know what I'm saying? The average general direction. And then the next time is when you're on the 15-minute chart, and I also use the 30-minute chart. You want to be paying attention to what time of day it is when you're able to be taking trades or on the markets. And by time of day, I mean, what banking session is it in? Is it the London banking session? Is it the New York banking session? Is it the Asian bank open? Is it the Australian bank open? You want to be aware of those things so that when you're looking at the correlated currency, you have that market's volatility and liquidity in your favor. Like, you probably should not be trading the British pound, okay, or the euro during the Asian market. You should be looking at the USD Japanese pair, because, you know what I'm saying, obviously the Japanese, the Asian banks are open and active during that time. So looking at the currencies that are correlated with the time zone of that bank. And that goes with the other. In London session, you're going to be wanting to pay attention to the British pound and the euro USD. And the New York, you're going to be wanting to pay attention to the majors, the USD pairs. Now, that's the second thing that I pre-qualified. So when it comes to the Compass alerts, I'm not paying attention to certain alerts. So if I know that on the US, Canadian, if I get an alert for a descending wedge on US Canadian during Asian session, I'm going to ignore that personally, because the Asian session, there's not going to be much volatility for US or the Canadian market at that time. And then there's the factor of a descending wedge is anticipating a bullish breakout. But I've already determined I'm only looking for short positions. So those are two ways to where I really can get my probability and my win rate up and through the roof. And when that happens, you're not now, okay, usually if any of these wedges, they're at least going to break out, you know what I'm saying, anywhere between, 3, 4, 5 to 10 pips, even if you're trading against the trend. But when I'm talking about the way I trade the wedges, I trade the higher probability setups to where I can TP out at 20 pips on one wedge, and I'm done for the day. You know what I'm saying? 20 pips a day? Think about that. You know what I'm saying? If you're able to focus, you're spending less time getting more pips, you know what I'm saying? And less work. And you know what I'm saying? You're less trading too. You're trading less because you're not taking, you're getting, 3 pips, and you got to keep taking 3 pip trades. You know what I'm saying? Now you're paying how much in commission fees through your broker, taking more, that many trades. It cuts into your profits. So that's one of the things that you want to pay attention to as well. Hold on. All right. Let me look at the chat. Can we go through how exactly you work out if the trend should go bearish or bullish? Ramon, can you explain your question a little bit more?
Yeah, sure, man. You hear me?
Yeah.
Yeah. Just how do you work out if it should go bearish or bullish this week? What do you exactly check to see if it should go up this week or down? What the trend is?
Okay. So yeah, for example, how I just mentioned, looking at the daily chart on the Canadian.
Yeah.
I'm looking at the majority. So in the past month, and this is the daily chart, and so this would be the month of October. So the majority of the candles, are they bearish or bullish right now?
Yeah, the bearish, yeah.
So sometimes I'm not doing a deep technical analysis. I'm looking at the general. So generally, looking at it, it's a clear downtrend. And I drew a trend line here, and it was a downtrend, and it broke out from some sideways movement the past 2 months. Okay, so this month and last month are pretty clear. Like what? In September, I probably would not have been able to have a clear directional bias because it was going sideways a little bit more in a range. So it's not as clear. So usually you want to pay attention to what market or what pairs are going sideways on the daily, or are they trending and they're going in a trend. Because, you know what I'm saying, you have several pairs you're getting alerts on. You don't need to be trading all of them. Some are going to be currently in a trend, and some are going to be currently in a range. You're better off sticking with the pairs and focusing on the one that has the trend going.
Mm-hmm. Okay.
Unless you're really going to be scalping 2 to 3 pips at a time, and you know how to do that well. But usually for the easier, you know what I'm saying, beginner setup, you want to focus your attention on the trending market. And the thing about that is discipline, because the market's only trending less than 40-30% of the time, and the rest of the time is ranging on the the lower time frame to the bigger time frame. And so with US Canadian, by looking at this, I even could go a few months back and say, okay, it was a strong downtrend here. It retraced, it was going sideways, and the downtrend is now continuing. And so for me, I'm looking at a continued downtrend for this month. Now, me looking at the monthly lows here, this low has not been broken. It came down about 90% of the way. And for me, usually, if it came down and touched here, that would be a double bottom. And that would signal to me that the market could potentially be reversing and turning bullish now.
Okay.
Now, if the market is, I don't know what's going to happen next. So that's where it just comes into watching the market. If the market comes down bearish this month and the next 2 weeks, and it comes and it closes and goes below these lows, then that's going to confirm a bearish market. Now, if the market goes sideways, it doesn't even come back down past here, then I may actually anticipate the market to be bullish. So it does depend on a few things, but at any given point in time, you're able to decide a general direction. Hey, this overall looks like it's in a downtrend, and there are certain things that will tell you, hey, it's not a downtrend. So like say this week we see UCAD break these highs. It comes back, goes sideways for a little bit, and then it continues above this area. Now I'm officially not going to have a bearish mindset on UCAD because now it made a new high. That means a bullish market now. You have higher highs. A bearish market is lower lows. So this is bearish because it broke this low and it broke this low. It broke two lows. So that's my confirmation for a downtrend. What's going to change my mind is if we see a higher high. That's what will change my mind. So anything below it breaking this high, I'm bearish. So that's I guess how I would look at it. So looking at the majority of the average direction. I think there was another question. Let me pull it up. Okay, how do you mark up what session is which? We just go in and do it, or is there a setting that does that for you? Okay, so Eduardo, if you're still on, I do both. So in essence, I'll go back to a smaller time frame. Where was I? Not there. It's right here. It's here. No, so many charts. Here. Okay. So if you can see this chart, this is a chart that I have set up a indicator with settings that does it automatically. And I've been wanting to post this in the group. I might post the file in the group so you guys can have it, or whatever. I can email it to you guys. This is an indicator that it specifically plots out what session is happening at the moment. So the red box is the London session, and it overlaps with the New York session for a few hours. So this is the London and New York session. The Asian session actually overlaps into the London session for the first hour, but I cut it short just because I look at a specific hours during Asian. So you can adjust this indicator. It's just called sessions. You can input when you want it to begin and end for that session, as we see here. But usually the Asian market is from 0 GMT, the beginning of the market day, and then 8 hours from there, 9 hours. So that would be, 8 hours from market open for Asian session. And then 9 hours into the market would be London session. So London session goes for another 9 hours or so. And then you have New York, which overlaps into London, and it goes for another 8 or 9 hours. But typically, I go based off of the New York session because I'm in Eastern time. I know the banks open around 8:30 a.m. And so that's when I'm getting up and looking at trades. So I'm paying attention to when I have the blue session going. The overlapping period is also good, but I'm not up at that time. Okay, for me that's about 7 a.m. London session. New York session will start 7 a.m. Eastern here, overlapping with New York. If you're in Pacific time, that's freaking 4 a.m. But usually probably around, around maybe like an hour or two before the New York banks open, I'm looking at the charts. You know what I'm saying? So I'm up at 7:30, sometimes 6:30, 7, looking at the markets, because when I do that, I can also look at the European currencies as well, because it's still it still would be London session. Okay, so let's see. let's say about 15 GMT. That's 8 o'clock. So if I'm up at 7 o'clock, I'm still in the middle of London and the beginning of New York session. So I'm usually up, and I get to catch the volatility of the European pairs and the U.S. pairs when I'm up at 7 a.m. Eastern. That's 4 a.m. Pacific. You know, if you're up at 5 Pacific, you know what I'm saying, 8 o'clock Eastern, you're still able to catch a lot of the moves. And sometimes reversals happen on the majors. You know what I'm saying? The European volatility coming in, and then the U.S. banks coming in, taking over. They're probably, you know, buying back and correcting the price. So sometimes reversals happen. So I have this indicator, but also I'm aware mentally of what time each session starts. And so I'm able to even draw vertical lines when I'm on my phone. I can just draw vertical lines at the specific time I know each session starts, or what so have you. I'll keep a mental note. So that's how I'm able to tell when I'm on my computer or my phone what session it is. And just I already know what time of day it is when that happens. So it would be a good time to be up at 4:30 a.m. Pacific. Michael Cuevas, if you want to catch some the I don't know, bro. It's up to you. If you want to catch the reversals, if you want to catch the sniper entries, I would be up. And sometimes you get the best trades because now you can have your trade, like I said, TP out at 20, 30 pips just because you're catching the chunk of the volatility that's happening. And that way, when you make certain sacrifices like that, you can essentially trade less and more efficiently. So that's what I would have to say about the sessions. These are my main. This is the main hunk of how I trade the compass, because when it comes down to the compass wedge alert, you guys already know what it is. It's pretty simple, but a lot of people are not seeing success because there's not really a structure around it that they've developed, and it does take some level of understanding how the Forex market operates and moves and being familiar somewhat. And so those are some of the main things that really improve my results with the compass. So now getting into the actual wedge alerts and how to look at them and how to trade them. I see about 5 different wedge patterns right here, but look at how the market is moving leading up to this news event or whatever it looks like. The market has been going sideways. So what I'm saying is, when you're dealing with the compass is not going to tell you the best times or how, you know, highest probability. It's just going to tell you every single wedge pattern that it finds, which the market does the same thing over and over again. So there's going to be multiple alerts sometimes. It'll probably send you, you know what I'm saying, something every 30 minutes, especially when the market is going sideways. And that's when people get confused. Is this a buy or sell? Well, look at the market. It's just telling you this is happening technically on the technical side. And it's your job to have some understanding to go look at the market and then check out what's actually happening. But take, for instance, you know, we're able to anticipate a, how do we say? Like I say, we was bearish. Those past 2 days was bullish. So like last month, we were bearish, okay? And let's see if
Hey Henry, you're breaking up a little bit.
All right. Thanks, man. Let me know if you can hear me a little bit better now.
Yeah, you're good now.
Okay, so I'm gonna go to a few days back when how I said I would have had a bearish bias. I'm going to pay attention to see if we can see any ascending wedge patterns forming. So this is October 22nd, October 23rd on the charts. And so with that being said, I immediately see an ascending wedge. I'm gonna plot it out right quick. And guys, when you're drawing the wedge, you already know what I think. It don't gotta be it don't gotta be a specific way. Sometimes I'll draw it from like the wick to the wick. Sometimes I'll do bodies. You know what I'm saying? I'll do something like that. Um, for the most part, I'm trying to get probably about at least you know what I'm saying 5 hours of price action in the wedge. And sometimes you'll get the wedge at a specific point because the compass will probably sometimes give you an alert, you know, an hour or so before it even plays out all the way. Because I mean, I don't know what the software is specifically looking at, but sometimes it's not happening immediately when you get the alert. Sometimes you'll draw it on and the market's only about right here. So you got 2-3 hours or so before it actually breaks out and confirms. But anyways, here we have an ascending wedge. And like I said, we have a bearish bias. And so the ascending wedge, it caught our attention. We're looking at the market. All right. And sometimes for the, what's it called? For the trend direction, all you're looking for is a bearish candle that's going to break and close outside this trend line. And when you do that, you're able to now have an entry point immediately. And I personally like to wait for the test. That's my killer entry. I'll sometimes take multiple trades on one wedge. So here we have a break. This candle, I would count that as a break. It was a strong enough candle. But then here we have another bearish candle and break. I would enter this trade here once I see this wedge break, this wedge form. And then I would look at what's the high. The high is about 5 pips. Usually, if I'm going to place a stop loss, one, I'm not placing a stop loss immediately until the trade's already going in my favor, just to give it room. And then another thing is I'm placing a stop loss, you know what I'm saying, 2 or 3 pips above the high. So we got 7 pips for a stop loss. So usually you want to at least have a 1-to-1 risk to reward. So my first trade, if I'm going to take multiple trades, I'm gonna have a 7 pip TP. Okay, if I take multiple trades, boom, I might go for a 2-to-1. So I'm gonna have a 7 pip take profit, and then I'm gonna have a 14 pip take profit. Right here, boom and boom. So I'm gonna mark these up and see what I got.
And then Henry, I wanted to see if you could possibly, I don't know if you've seen Susan's compass fusion formula.
I have.
I know there's a lot of people that use it. If maybe just for this particular wedge, maybe throwing on the RSI period 8 to see what that looks like.
Mm-hmm.
Just for extra confirmation.
Yeah. I'll throw that
after you're done.
Yeah. So as we see here, though, Michael's right. We see here, this is a clean trade right here. Boom, first TP hit. We got a small retracement. It didn't go past your entry, and second one hit. And as you see, this type of move, this happened in the middle of the London session. So that's where volatility was picking up. I mean, this day looked like it had some volatility through all the sessions. But also one thing that Michael was mentioning too is for those who are familiar with Forex, you know, some of you will be aware of the different types of oscillators and indicators. I personally sometimes like to use the overbought and oversold oscillators, such as the relative strength index, the stochastic oscillator, and I personally like the CCI. So I'm gonna put on the stochastic. I have a 5 ratio and a 3 slowing. And sometimes I'll do something like this, and I'll put on the stochastic and the RSI when I'm wanting to even pay attention to that. For me, I'm a technical trader, and I don't necessarily need indicators as confirmation, but sometimes for people that are more visual, it does help them. And the thing with indicators is indicators are lagging. So by the time an indicator is indicating something, for those of you who understand price action, you're already able to see what's going on. But I'm not sure how much time we have on this call, but I think it might cut out. So if it cuts out, I'm gonna restart the link and hop back on. But usually with these overbought indicators, we have right here, the market has, before the market actually broke the wedge, it was.
But yeah, I think just kind of going into it, I definitely want to make a flyer specifically for this group. That way, when we have some of the better young traders, obviously we can host different times of the day. We could have a different host to do a different type of time of day.
Yeah.
And obviously, under your not necessarily supervision, but I would say, your guidance. I feel like you'll know when someone's ready to be able to do something like that.
Oh yeah, I mean, once people feel confident enough, they're gonna speak up and start answering questions in the group. Like you and other people. And once I see someone do that, answering questions, they have enough knowledge to know what's going on. Like, okay, like I'll let them. You know what I'm saying? We're all pretty much doing the same thing, or we should be working as a team and stuff. And so when I see that, it's like, yo, why not? Why not have another host? Why not have someone if they know what they're talking about? They know how to aid someone in, saying trading the breakouts or the alerts and stuff, because it's simple stuff. So, my knowledge is, not necessarily better or different than someone else's. It's just my experience and the way that I apply my knowledge may be different. You know what I'm saying? I don't share too much of my own strategies unless someone is asking me. You know what I'm saying? I'll share concepts that help me when I'm trading any strategy. You know what I'm saying? So that's
what do they say? They say closed mouths don't get fed. Yeah.
Yeah, bro. That's what I'm saying.
So that's why I try to ask as many questions as possible, even early on, because after I got to know you, I was like, all right, let's run it. Let's run it up.
Yeah, exactly, bro. But anyways, I think everyone's back on, and it's being recorded. So what I was saying last is we wanted to throw on some indicators here just to show you what you're able to see when the market is doing its thing. But the thing I was wanting to point out is that when the market is correcting itself from a trend, these indicators will pick it up. So usually you'll have the 70 or 80% level, and when you have the RSI or the stochastic above or below these levels, you're anticipating a correction or a reversal. And when these lines and these moving averages come cross back below, you're looking to have a confirmation on that direction or that trade, or some people use it to confirm their trade entry. And so I'm going to look at this specific candle that broke out, which is this candle right here. Okay, and no, this one, the 730 candle, if we look down here, has already been confirmed as crossing back below the levels on the indicators. The first confirmation of the indicator showing a reversal is when the market is actually slowing down right here, and you're able to see the market slowing down and making a U-turn and a correction because of these small candles. This smaller price action is indecision, or this is money exchanging hands right here, because you have these wicks to the low and to the high. You have a small body. You have it going sideways a little bit, and so you're definitely able to see with the candle, I can read the candlesticks, which is a lot. You can see it as it's happening. The indicators will also show you what's happening. So in essence, what's happening is this indicator is showing you momentum and slowing down and turning. And so by the time we get to the breakout, volume is actually picking back up. You have larger and larger candlesticks, okay, and you have it crossing back below here. So usually if you have a breakout from a trend line, a large body candle, and then you have the stochastic or the RSI or the CCI indicator, they all work pretty much the same. When you have them crossing back below their levels, that is usually a confirmation of that breakout or that reversal. When it's doing all this stuff in the middle, you're not really looking to do anything as far as taking trades. You can, but they're lower probability. So this would usually confirm a higher probability setup. And that's what I think Michael wanted to show you guys who do use the RSI strategy in conjunction with the breakouts, which I personally like to use the stochastic and the CCI, but the RSI does show the same thing as well. And so this right here is a pretty good trade. What are your settings for the CCI indicator? So for the CCI indicator, I use an 11 period. I'm just going to throw it on and show you. Trend, CCI, commodity channel index, I have a period 11. And so, yeah, sometimes you can move that. So I have a period 11 on here, and that's kind of what I use. But I use it with a different strategy. Sometimes with the when I'm trading these what's it called, the wedges, I'll just have it on the I'll play around with a 14, which is just kind of the default, the 14, and then I'll do something like a 9. But the CCI just at an 11 is kind of where I'm at usually. And for me, I'm able to see, like the CCI did not, I will not, like the CCI was not picking up the same thing that the RSI was at the same thing, yes, but the levels that I have on here, the levels for CCI are not 70 or 80. The levels for the CCI are 100. So that's one of the differences. So the CCI is gonna get something that's really overbought or oversold, quote unquote. You know what I'm saying? So so it didn't even catch what the same level that was happening. You know what I'm saying? It broke the 100 level a few candlesticks back after this doji. So the CCI picked up the market crossing back and reversing way back here. And if you usually see me in the group, my trade entry is not always here. I have multiple trades, and 2, I'm in the trade before the market breaks out. Not just because the CCI is confirming some of my other price action analysis. So I personally, like I was explaining, would have seen the market slowing down from this trend, these candlesticks right here, reading that, and I would have probably made a trade in conjunction with this level of support right here and resistance, okay? And I would have made a trade before the market confirmed the visual wedge breakout. So I would have been in the trade before the breakout. I would have made a trade here, boom, okay? And then if the market retraced and retested the trend line, I would have made another trade. So it did make a small little retracement, you know what I'm saying? And usually it'll come down and then come back and touch the trend line and continue. You know, this retracement was small here and small here, but these are, if you know what I'm saying, if you're on your way to your TPs, it's a good way to scale in when you're confident the market is going to continue in that direction. You're going to sell the pullbacks on the smaller scale. So just like we went from the daily, we had a directional bias for a bearish market. We're only looking for sell entries or ascending wedge breakout. So we're looking to short the market. You're taking entries on every bullish retracement. So you have a bull run here, we sell. And when you're in the sell, you know what I'm saying, you really get into advanced trading. We have a pullback, sell again, pullback, sell. So you don't got to do all that. You know what I'm saying? There really isn't a reason to when you're already capturing 21 pips just on this one wedge. You got 2 entries here, boom, 7 and 14 pips. I personally like taking 2 entries at the initial breakout because it's better than taking one trade, big trade, and then trying to close half the position and let the rest run. Because one, when people are on their phones on the go, it's kind of complicated to modify the order, adjust it, close half the – most people don't know how to do that. You know what I'm saying? Because you could close half your trade from the MetaTrader from one position, but it's better to just set 2 separate trades where you can set 2 different take profits. And that's what I like doing. This is a trade, boom. We even have a possible New York session ascending wedge. This is the time I'm getting up looking at the markets. So essentially you can get one before you go to bed, one when you wake up in the morning, just being able to pay attention to the time zones and specific pairs. So we have an ascending here as well. And this looks pretty nice. We have a large candle, a small candle. Okay, we have a large breakout. The candle closed right outside the trend line. We have the stochastic coming back down from the level. The RSI has not reached up into that level yet, but we have the stochastic and the CCI on that breakout candle giving us a confirmation. So boom, you got your 2 entries here. Okay, you have your you know what I'm saying? Well, first off, you look at your risk. You have an 8 pip high. Okay, so 2 pips above that, above the high, you have 10 pips. Okay, 10 pips your risk. You want at least a 1-to-1. I would want at least a 1-to-1. So you got a 10 pip take profit. And on your second trade, you can get a 20 pip. So we got 30 86s. I want 30 76s. I'm going to do 30 75s. Okay. So boom, you got a 10 pip TP and a 20 pip TP off of this ascending wedge. Another way I like to look at too is I'm looking at the recent, structure here. So we have support and resistance here that confirms where the market could possibly give us a reaction, and it did. It was sideways a little bit here, but anyways, that was a clean trade as well. We got boom, boom, because we have the volatility. This is right as the U.S. banks are putting in their orders. Okay, and this right here is something to really take as an ideal setup. You're not going to get something as clear as this on every wedge. You know what I'm saying? But the way I show you guys how to filter them does definitely get you to actually see the more ideal clean setups more often and have the eye for it. Hey, what time of day is it? Boom. All right, I'm not looking at that alert. Okay, boom. What currency pair did it just give me an alert for? Okay, it's not that time to be looking at that pair. Okay, I'm actually going to just be looking out at the Japanese pairs or maybe the Australian. I'm going to go look at the Australian dollar because Australian market is also around the same time as the Japanese market. So a lot of times the Australian market, I'm looking to trade during the Asian and the New York for setups. And on the Australian dollar, it's a little bit less volatile. So my TP is like, it's like 5 to 7 pips. Just because it's not giving out much volatility. It's a liquid pair. Same with Euro USD. My profit levels are a lot smaller. Just because the more liquid and more popular pairs are going to be less volatile, just because they have so much money in them. A pair like UCAD or UJ, when you get into British pound, that's probably one of the most volatile pairs that you're going to get alert on, besides gold. Gold is not even a forex pair; that's a commodity. So you're dealing with a complete different beast when you're trading gold. Y'all already know if you've seen what happened last week. Yeah, I like trading the Australian dollar, especially if you want to come to a safe pair. I don't even set freaking stop losses when I'm trading the Aussie, because it's not going to move. Sometimes, even if I'm wrong on the Aussie, the thing is so liquid that it'll come back my way the next whatever, just because, it'll completely go wrong on me. But I look at, I'm only negative, 4 pips, because the pairs, the daily range is 15 pips or something like that. You know what I'm saying? So right here, the daily range is something like 25 pips. You know what I'm saying? Compared to a pair like the British pound, your daily range is probably 125. Right here, 90. Daily range 90 on the British pound. So that's one thing you want to pay attention to. What kind of size of a trade are you going to be taking on each pair? And how I discussed in the last video, the way that you calculate your risk is, when you're looking at a trade, you're going to look at where's a potential area you're not willing to lose any more money. And before you get into money, you're looking at the pips. So if you're taking this trade and you have, 15, what's this high? You have 15 pips right here as your stop loss. Okay, you now got to calculate, if I take a mini lot, okay, that's gonna get me about $1 a pip. So if I get stopped out, that's $15. Am I willing to lose $15 on this trade to gain, 30 or 40? Okay, so then, you're able to kind of have a scale of like the risk factor. If you're like, hey, no, I have a small account, I'm only going to trade a micro lot and get 10 cents per pip on my trade. You know what I'm saying? And then when you get into standard lots, that's $10 a pip. So you want to be aware before placing your trade, how much money per pip is are you going to be in the positive or negative? You know what I'm saying? So being aware of your account size is important. Usually you're not going to want to be risking more than 10% of your account. And that's pretty aggressive, but I'm also accounting for you having multiple trades going. Now, if you're taking one trade at a time, you know what I'm saying, a good 2% of your account per trade is, I would say, is average. You know what I'm saying? But people have their different levels. Sometimes, you'll see me risking about 20% on a trade just because I'm so confident. But then at the same time, that may be the only trade I'm taking on that pair the whole day or whatever, because I hit my target. So when it comes to the risk, it just really depends on what you're comfortable with. I'm not here to tell you how to trade or what risk level to take. You know what I'm saying? You're saying the forex market is definitely something to really have from an educational perspective first before you get into the actual like the execution of doing it live. So if you're not live and comfortable, go back to the demo. Okay, so you can get the execution down, so you can practice. Now, me personally, I don't think demo trading is going to give you the same level of learning as trading with live money. So if you really want to get the best learning experience, okay, you just need to have equity that you're willing to lose. If you can set aside, 20 $50, $100 that you specifically set aside for learning purposes. You're not trying to, the money you're not putting up to make nothing off of it. You just have enough savings to where, if, you know, you've completely are cool with set amount of money. And then what happens is your psychology when you're trading the market is going to be completely different, because you can be a beast on demo and you feel like you're good enough. You go online, you fund your account, and now you're losing. The reason is because you're not, like, the strategy is not working. It's that your psychology behind having real money is now affecting your decision making. You may be second guessing a little bit more. You may be having a little bit more fear. So I say, like, yo, even if you have $20 in a little micro account or $50 or whatever, it's still real money to where you're making decisions in a real environment to where, okay, I'm risking, 10 cents right now, but it's still real money. So you're still able to make trading decisions with the proper environment. And I think trading with a small, $20, $30, $50 account, if your broker even allows that small of a deposit. Some brokers, their minimum deposit is 100 or 200. But some brokers, they give a little bit more leverage and they give a little bit smaller deposit. And those are good brokers to practice on, and things like that. So because when you practice on the live with the little bit of money, you have a better environment and a faster learning curve than if you're staying on demo, doing the stuff, and blah, blah, blah. The demo environment is good when you need to practice a strategy and execute it. But after a certain level, the demo is not good for actually learning how to trade. It's good for practicing certain things in certain contexts. And so when I tell people get on the demo for learning purposes. And then the next step is go to live also for learning purposes. When it gets to you want to actually get trading to be making money, you need to let me give yourself a challenge. If I can turn this $20 account into, if I can double it, okay, that's something that you can have as far as building your confidence, because you didn't just double, $1,000 of paper money. You doubled $20 of real money. It's low risk, but it's still the fact that it's the psychology behind having real money. It plays a huge part when it comes to decision making. So that's a lot of times I like to explain that to people because they don't really understand why they're losing. And it's not because the strategy is not working. It's because when you're trading with real money, you're going to be like, oh, I don't want to place a stop loss, or, oh, you're going to place a really tight stop loss, like 1 or 2 pips. And so you're getting taken out by the spread as soon as you enter a trade, because you're like psychologically psyching yourself out, trying not to lose money. And it's affecting your trading execution. And so that's one thing that I like to tell people, like, when you have a certain ratio in your trading, like, take a look at what are you thinking right before you're about to enter a trade. Are you confident? Because when you're trading, you're trading against robots, my man. Ladies and gentlemen, you're trading against freaking, hedge fund algorithms. These people are not in there, second guessing. So you're really trying to trade against a structure that is, like I said, something that is, you guys already know what it is. If you're trading the Forex Trade Ringer software with market hackers, you understand the power in that. Having a algorithm, being in the market, making decisions for you so you can have leverage. For me personally, I tell everyone straight up, like, I may look like a chill dude, but when I'm trading, I'm stressed. I may be a good trader. I am highly under stress. Not because I'm losing money, it's because I'm at risk with my emotions, trying to make decisions without emotions. Trying to do that it brings stress, because the human mind is not built to function like a robot. So I just tell people all the time, like these are factors that really play into the success of the Forex market. And if you guys don't ask questions, I'm going to keep rambling on, and I do not like keep rambling on. So, so Eduardo said, what are your settings for the stochastic and the CCI? I think I already said that. My setting for the CCI is 11. In the stochastic, I have a 5 and a slowing 3. But as far as the wedges go, when you're trading now, let me go back to the UCAD. We looked at trades that were in line with the trend because we had a bias, right? So now let me kind of show you a trade that is against the trend. So do you guys see this here? The market slowing down and going into Asian session. But at the same time, you might get a nice alert coming in because there's a descending wedge. And as you can see, what happens is, for one, there's no volatility happening because you're in the middle of the Asian market trying to trade a US pair right now. So if you take this, you're hanging on to this trade in unnecessary risk going sideways. Okay, some people get psyched out. It goes back below their entry a little bit. They're scared getting out the trade. Whatever happens, boom, it comes up. You know what I'm saying? They hold it on a little bit too much because from here to here, you know what I'm saying, they don't feel like they've got enough pippage for the amount of time that they've been in the trade, okay? And it comes back on them, okay? They're either getting stopped out or, you know what I'm saying, they're trying to take another trade because the compass alert gave them a descending wedge and it has to go that direction. So now they're taking another trade here, okay, holding on to it. It doesn't come back above the PP that's up here, okay, and then the market comes, boom, and does that. Okay, you know what I'm saying? I just narrated to you like a normal thought process of a trader trying to trade his market under, you know what I'm saying, having no discipline, no trading plan. They're just going off of a strategy, you know what I'm saying? In essence, you could have made money off this. You could have had, okay, boom, 4 pips there. Okay, maybe a re-entry, another 5 pips. But a lot of people, who's going to be up managing this trade for freaking, you know what I'm saying, 6 hours, 7 hours? I'm not, the whole point of these softwares is so that we have leverage and time freedom. These tools are not here to make us do more work or, you know what I'm saying, suck up our time and man. No. So I tell people, like, be aware. The reason why I pre-qualify is so I'm not taking myself through unnecessary hopes and dreams that it's going to work out when the conditions are completely telling me that it's not ideal, you know, for what I'm trying to do. Now, I may take a descending wedge when the volatility is picking up a little bit more during New York session. I may be able to be more confident taking a counter trend wedge, which develops around here. Okay, that's the difference. I'm gonna trade against the trend, but look what happens. We have a solid confirmation right here on the RSI. All right, CCI. We have a nice break strong with a large candle. And okay, our risk is a little bit more, about 15 pips. Okay, but we can get about 20 on this. You can set it. You can set a 1-to-1, 15. 15. Well, no, 2 pips below is 17. So you have a 17 pip stop and a 17 pip take profit for a 1-to-1. Okay, boom. This happened in less than 2 hours and you're out. Okay, that's the difference trying to trade counter trend in the wrong market conditions. So being aware that if you will trade counter trend, you're definitely aware that you need to do it when the market is going to do it fast and do it, you know what I'm saying, like with you know, do it fast and with some volatility, or same thing. Volatility is kind of the measurement of how fast the market is moving as well. But so those are 2 different examples of trading against the trend. One, you have the wrong conditions if you're going to trade against the trend, and one, you have the more ideal conditions. Is what I went over. So those are the different types of setups when I'm looking at the wedge alerts. I have a general directional bias based off of the higher time frame. 2, I'm paying attention to what time of day it is, to pay attention to what banking session is bringing in the liquidity. And then I'm taking that into filtering out the wedge and what pairs I'm going to be trading. And then when I'm getting alerts, I'm looking at is this alert going to give me a counter trend break, or is it going to give me a trade where I can get in the direction of my bias for this week? So those are the main things that I use to filter the alerts so that I have a higher probability and a more a profitability when taking these trades, because you don't need to take every one. And when you get a nice successful one, you're getting 20 pips a day. Okay, if you know what I'm saying, you're gonna wait on one currency pair. You know what I'm saying? You don't gotta be taking and trying to get 100 pips off these damn alerts. They're scalps, they're intraday moves. So you're gonna look for a 1-to-1 and a 1-to-2 if you want to get some more pips. But essentially, you know what I'm saying, the less you trade, and you're able to track and be more consistent. I like setting multiple entries because, you know what I'm saying, I like trading with a pretty hefty amount of risk. So I don't mind the risk if I'm going to be making a little bit more at the end of the week. A lot of people, they're just focused on consistently executing trades well, which if you're a beginner, you should not be focused on profit. You should be focused on having a consistent week of executing trades well according to your trading plan at the beginning of the week. But yeah, that's kind of what I got to say as far as the wedges, because that, I mean, it's pretty simple. As far as what I'm looking at for this, anticipating this week, I went over where I'm at on CAD. I'm bearish on the daily on CAD. For USD, my bias is bullish. I'm looking for the highs to break out. Okay, so I'm bullish. I've been bullish all last month because of a pattern that I've seen on the daily for the Euro USD. I'm going to be bearish if we don't get a break above these highs that looks feasible, because on the bigger scale, the past few months, we've been bearish. Okay, so this could be a retracement of this bigger trend, this macro trend. So I'm going to let the market tell me what it's doing. For the British pound USD, just because I know Brexit is seasonal right now, it's pending, I'm bearish. Okay, and which tells me like Euro USD and GBP USD are usually doing the same thing. Okay, so my bias might be looking for a reversal on the Euro as well. I'm bearish the British pound JPY. This isn't coming in on the alerts, but I am trading the British pound JPY, and I'm bearish JPY, British pound JPY. So in essence, I'm bearish the British pound because of Brexit, and so therefore, usually all the British pound pairs are going to be, you know, if the British pound weakens, it's going to weaken every cross with the British pound. And since I'm also anticipating the Japanese yen to strengthen, also because of some fundamental things going on, I'm looking at a bearish bias this week for the Japanese yen. I'm looking for shorts. We have this large volume bearish candle on the daily from some news last week. What else are we looking at? UCAD, UChief is also a major.
AUD, USD.
Okay, yeah, I'll hit AUD. The UChief also looks bearish, but if I don't see this level of support right here broken, okay, I'm looking at a reversal We have 1, 2, 3 testings. It could come off of here and be bullish, but then again, this all depends on what's happening with the Euro USD. And one thing I like to say is you also have correlations, because the USD is now the first currency. When you're dealing with these other majors, the USD is the second currency. So if the Euro USD is bearish, the USD Canadian and the USD Swiss franc are usually going to be the opposite. I personally have seen the USD chief be almost directly oppositely correlated, more so than the US Canadian and the Japanese. So when I'm short Euro, I'm usually buying the US chief and doing well. And I'm not, like, sometimes I won't even be paying attention to the USD chief, but if I'm trading if I'm shorting USD Euro USD, I'll just take a trade on the USD chief if it looks reasonable, because it usually does the opposite. So for me, based off of the understanding that I know it does that, this looking like a retest here and a bounce is what I'm looking at to be more probable, but I'm going to be paying attention to both. So I'm long on the USD chief. I'm looking for long entries this week. On the UJ, I already went over that. You said AUD. AUD USD. It does look like it is. US, like I said, when you come into these major pairs, you can count on more sideways movement than trending movement. You'll come into ranges like this. You have boom, 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 support, boom, broke below, resistance, some resistance, broke out, confirmation, and this looks like it could be long, but sometimes you'll have also second and third levels of support that would still make it will still cause the market to still reverse. So I would still, since this trend has been going, there was a breakout, but I'm still would probably be bearish. The Aussie, I personally, I'm probably not even going to trade the Aussie this week, because I'd rather wait for a more clear point. We'll see how the market opens, because right here, this candle to me looks like a reversal candle. We have because just based off of this, I'm going to stick with a bearish bias on the AUD. But like I said, these are my opinions based off of some of my knowledge, and it's always subject to change as the market changes. You know what I'm saying? So if you're in the group, you'll get my updates on what I'm doing personally and things like that. So that's my disclaimer. You know what I'm saying? If you guys have any more questions, we have about 90 seconds. Let's see what else we got. So when market opens, that would be around Asian session. Yes, that would.
Thank you, Henry. Appreciate it, brother.
Yes, sir.
Maybe looking to do one maybe midweek, Tuesday, Wednesday.
Yeah, I definitely want to pick it up. I definitely think we can do Sundays. Sunday Sunday calls for sure, because I'm most free Sunday mornings and stuff. So during the week, it depends on what I'm doing. If you want to be correlating as far as, you know what I'm saying, like checking in with just kind of, because more people are becoming active. So I want to do it during a time where there's going to be more people available across the time zones. So we may have to take a poll.
For sure. And I'm pretty sure once we come out with flyers, people will see it more.
Be more aware, yeah, and try to make room.